Well, the first thing you have to do is have a good payment history, which means no late payments. FICO tells us if you're a 780 credit score, one late payment will drop your scores 90 to 110 points. And if you're a 680, it will drop your score 60 to 80 points. So that's the first thing you have to do. Make your payments on time.
Service members should get the most out of their VA benefits for home ownership. That's our belief, and that's why we're here. So whether you're looking to own your dream home, considering refinancing, or just exploring the VA home loan process, you've come to the right place. Welcome to Helping Heroes Become Homeowners. Hey everyone, this is Richard Sarey with Alliance Mortgage Group, and I'm your podcast host for Helping Heroes Become Homeowners. Today we got a really important topic, and that's credit and what credit does to not only your lending avenues, but in terms of it could also maybe help you get a position that you're inquiring about. People do look at credit. So today we have Ron Reed with us from the credit specialist out of Van Alstyne, Texas. Ron, thank you for joining us today.
Thank you, Richard. I'm glad to be here.
Absolutely. So can you tell a little bit about yourself? What got you into helping people repair their credit?
Well, many years ago, 20 plus years ago, my wife and I actually went through credit repair, and we had a good experience. The company was a good company. I learned a lot about credit, which prior to that, we were pretty ignorant on credit. And so I learned one thing. Most people in this country don't understand credit, and that's the reason a lot of times they don't have good scores. And so eventually I decided to go to work for a credit repair company. The first one wasn't so good. The second one was pretty good. And then I ended up being a general manager at a large credit repair company in McKinney for several years. And then back in 2017, I started my own company.
Okay. And ever since then, you've been helping people on your own?
Ever since then, yes. Yes, sir.
Awesome.
Yeah.
Well, some of the things that I get hit with countlessly is, why is my credit score so low? Why is my credit score not matching with I pull on Credit Karma or I get the FICO.com? Can you tell a little bit about what the differences are between those two?
Sure. So like a mortgage company like you guys are going to pull a FICO mortgage report. It's going to have FICO mortgage scores. Credit Karma, one of the companies we use is Identity IQ. They are going to have Vantage scores, and there's a difference. The Vantage scores, that's going to be a soft pull, whereas most of your FICO scores will be a hard pull. And so we want to use, when we're talking to somebody and looking at their credit, we don't want to have a hard inquiry. So we typically use something that provides a soft inquiry. The difference can be, a lot of it is going to be previous payment history. Like they may look, I know, for example, on automobiles, if they use auto scores to get approval, and their FICO auto scores, those are going to be based a lot on your previous automobile payment history. They're going to factor that to a higher degree. And I'm sure they probably do that on mortgages. So that's a few of the reasons why you may see different scores.
Okay. That's been really I wouldn't say the misconception, but customers just can't figure it out. For as long as I've been doing it, trying to understand credit score algorithms and how everything comes together. You just look at so many credit reports, you kind of get a general idea of what you can do to improve it by doing X, Y, and Z. So I think that's where you come into play as a more detailed conversation, so to speak, on what exactly they need to do once you see what you have in front of you as far as their payment history and what's reporting, right?
Yes.
Okay. So when it comes to credit score, what do you think is the biggest driving force to have a higher credit score, let's say from a 740 versus a 620?
Well, the first thing you have to do is have a good payment history, which means no late payments. FICO tells us if you're a 780 credit score, one late payment will drop your scores 90 to 110 points. And if you're a 680, it will drop your score 60 to 80 points. So that's the first thing you have to do. Make your payments on time. My wife and I, since we went through credit repair, we've never had a late payment that's 20 plus years. And that's because we learned how devastating just even one late payment can be. So you want to, month in, month out, make your payments on time. And then, of course, there are other factors as well. But that's the first and most important thing to do.
Is there a way to get a late payment removed? I'm sorry, is there a way to get a late payment removed if it's reporting erroneously?
If it's reporting erroneously, yes. So what we typically do, I can get on the phone with a client. We call, let's say it's a mortgage company, and they do make mistakes. Mm-hmm. We get on the phone, and we will have them go in and talk to them and explain why it was incorrectly reported. Same thing with credit cards. That is something very tough to do. And even then, if you have a reason that it was incorrect, a lot of times it's still even very difficult to get it removed or corrected.
And that time frame usually takes a little bit, right? At least 30 days, you think, to try and get, you got to get a response from the creditor first.
Right. It can happen quickly, but it takes a while for them to report. So it could be, by the time it gets reported, it could be 30 to 40 days.
Okay. So it's worth a shot if they truly think it's reporting incorrectly, because that's going to bring that score back up.
Yes. And,
okay.
And it doesn't necessarily have to be inaccurate. If you have, let's say on a credit card, if you had a late payment on a credit card, it's possible. Call them up and ask for forgiveness. That's one thing you can do. Does it happen very often? No, but that's at least one thing to try.
So let's say somebody's in a position where they have lates maybe last 12 months, and I pulled the credit report in August, and that credit late was September of 23. Will they get a benefit of an increased credit score if I were to pull that in October of 24? Or is it still going to be somewhat of a hit because it's over 12 months, but less than 24 months?
Okay, so that's a great question. Typically, a 30-day late will affect you, for the most part, for the first 2 years. Every month that goes by, and this applies to good credit accounts, bad credit accounts, but every month that goes by, as time passes, the effect will lessen. So maybe 1 month isn't going to make a point difference. It might make a point or two, but after 2 years, unless it's a 60-day late or more, those are going to be having no or very little effect on the credit score.
Would it benefit them to pay off that account if it had a late within the last 12 to 24 months? Just pay it off in full, or still have that payment balance and making those monthly payments?
So you asked me that question again. I'm sorry.
So if I've got that scenario and I still have a balance, and let's say I want to just pay it off in full. I paid off the account in full. I no longer have a balance or a payment. Does that help the score, or am I still going to be hit as part of those late payments in that 12 to 24 month range?
You're still going to be hit for the late payments, but you also may be hit. It depends on the type of credit account. For example, if you close a credit card, you may take a hit on your credit score because you have less available credit. There's more to it than that, but that's a brief explanation. For example, on installment accounts like a car, student loans, things like that, if you pay those off early, that could actually affect your credit score negatively as well, because you're removing age. If you've been paying on a car for 3 or 4 years, you've got good age on it. Once you've paid it off, that age no longer applies to the rest of your installments, if that makes sense. It makes sense.
Yep. And you bring up a good point, the age of the account. Tell me a little bit more about what that does to your credit score.
Well, okay. So age of accounts, where you're really going to see it is not necessarily so much from 600 to 700 credit score, but from 700 to 800 plus. That makes a huge difference. People will say, well, how do you get to an 800 credit score? and it's a lot of it is just about taking time. It takes a while to do it. You have to make perfect payments. You have to be utilizing your credit cards wisely. You have to be, you have to watch what you're doing. But a lot of it is going to be just so much time.
Right. So the older we get, the better we pay our accounts over our lifetime. Our score's essentially going to get to that magical 800 number.
There you go. Typically, that's true. Yeah.
Makes sense. So going back to closing an account, I have some customers that they don't know any better. They pay off the account, they close it out. I don't know if it's the temptation of using the card again or whatever the case is, but they don't know that does hurt the credit score, as you just mentioned. Is there any suggestions if somebody does that, what they should do to maybe open up another account to improve that? Or what suggestions do you have there?
It kind of depends on where they are in their credit score history. Like if they're a low score and they've done that, then it may be difficult to get approved for you may get approved for a small limit card. But there are things you can do, like be added on as an authorized user is a good example. If you know somebody that has good credit and can add you on, then that could be a huge benefit. In fact, let me stop right there and add one thing, Richard. When your scores are low, typically something that's going to make a big difference is revolving credit. And revolving credit are going to be credit cards, more so than adding on like a car or something like that. In fact, adding on a car initially will typically lower your credit score. And even adding on a house can typically lower your credit score. But usually, depending on what else is on your credit, if you add a credit card, you can see your scores zoom up like unbelievably high, depending on the rest of your credit.
Because it's revolving. That has a lot to do with it, the type of account?
Yes. I added a guy on as an authorized user, and I raised his score in 1 month. It was on Equifax. I raised it 202 points. He had no credit cards. Had no credit cards whatsoever. Had no credit.
Well, that definitely makes a huge difference in what you can get in terms of mortgage rate or any kind of qualification on a loan product.
Right. Yes, sir.
Yeah. So one of the other things that we talked before we got on was, the understanding of how credit gets put together from a certain, I guess, time frame. So an example would be my two older kids. One's about to get done with college. One's done with college. He's now thinking about buying a home. And, credit just for my industry has always been a big thing. So it's been something we've talked about since he's 15 or 16 years old is how do I build credit? So can you give me some ideas for our listeners if they've got children that are getting to age where they're leaving the nest and they're going to start maybe purchasing a home, how they can maybe build up credit if they haven't started that yet?
Sure. Well, I encourage your listeners, if they have credit cards, that's an easy way. Take advantage of it. It's kind of a gift that's given to us. We can add our children on as authorized users, and that's going to give them a big start. What I try to do with my clients, if they're on as an authorized user, before we remove them as an authorized user account, I'm going to help them get a really good credit card. Because that's probably going to be the first time they've ever had one, or it will be a long time since they've had a good credit card. One that has a limit of like 6,000 or 10,000 or maybe more. One thing too we've noticed is the higher the limit, the more it affects the credit score, and that could be a good effect if you're using it properly. It can also be a negative effect if you're not using it properly.
Right, that's the biggest kicker.
Yes,
you get that credit started, you've got to manage your credit. So how often should someone look at their credit profile throughout the year? Once a year, twice a year?
Yeah, I would say at least twice a year. If you can get on a good monitoring system, even Credit Karma, at least you can monitor your Vantage scores on TransUnion and Equifax, which that's helpful because if something hits, it's usually going to hit one of those. But some things can hit, and if you're not looking, you don't know they're there until you go to buy a car, and then all of a sudden you're hit with, oh my gosh, I didn't know I had a late payment back then, or whatever.
Yeah, one thing that my wife and I subscribed to years ago that we still do, I can't remember the name of it, but we pay a fee once a year. It does monitor our credit. It does monitor if there's a new inquiry that pops up out of nowhere.
Right.
It does give us alerts on certain things. So, maybe having something like that in your profile or something set up where you're getting notifications just to protect your credit too, because there's so much that from an internet, and it's just so many things can be taken, right?
Exactly. Yeah. And one of the things too, if you're most of these credit monitoring companies, you're going to have a certain amount of insurance against identity theft and so forth. So a lot of times, and hopefully we never have to use that, but a lot of them will cover certain things if you do experience that.
Are there any solutions to getting certain things removed off your credit? Because I mean, that's one of the biggest things that you do is help repair credit, get people on the right track to get higher credit scores. Can you give us some examples of what you've done in the past to get things removed and get their score up where they can purchase a home?
Well, there's all kinds of things. We do simple disputes. We can also do pre-legal disputes. I'm not going to get into that too much right now. You can do pay for deletions with some collection companies. If you've got collections on your credit report and it's being reported by the collection company, not by the original creditor, then there's a potential that you may be able to get those removed once they're paid. Some other things, one of the things I do when I first look at a credit report and the potential client lives here in Texas, they're a resident of Texas, I want to look at each collection and make sure that collection company has a $10,000 surety bond here in Texas so that they're operating legally. In Texas, it's required that the collector has that bond. So if they don't have that bond, there may be ways to get that removed, may actually be ways to get the debt forgiven, and even maybe if a lawsuit's filed, maybe even get the client some pocket money.
Okay. And then we verify that's been removed. You'll do another soft credit pull to see if that's been taken care of in the time frame that you've been told it will be from the creditor?
That's right.
Okay. And then you'll notify the customer and then get back with the lender to see if we can make that deal work at that point in time.
There you go. Yes, sir.
Excellent. One thing too, you mentioned disputing. From a lender standpoint on disputes, when we see disputes on the credit report, if it's an FHA loan, we typically have to get those disputes removed. If that balance is over, I want to say $1,000, I think is the cumulative total.
Right.
So from a credit score determination, what do you think the effect would be if you put it in dispute, then I've got to remove it out of dispute, what the credit score variance would look like?
That's hard to say because it's going to depend on one thing, the age of that account. The older it is, the less effect it's having, right? So it's hard to say, Richard, but I've seen it.
It's safe to say it does have some kind of effect.
It does definitely. Right?
Yeah.
It does.
Okay.
It can have an effect.
And when it says dispute, I've seen on the Bureau too, dispute resolved. That means that the dispute's gone through its process, and that's just how they're reporting for some reason or another that it's been resolved. Yes.
So
that's being calculated.
That shouldn't affect you, the mortgage loan officer, I don't think, but after it says resolved.
No,
but also,
doesn't. I just wanted to make sure.
Yeah, if you called me up and said, "Hey, Ron, you guys disputed this. I can't do anything until those are removed." I do have a form that I send out to your client, and it gives them the phone number and the process to how to get that removed. And they do it themselves. It's not a very difficult process. Now, sometimes you may have to be on the phone for a little bit, but
right. But again, it's something that the customer, if we want a higher credit score, they need to get that done.
That's right. Yeah.
It's managing that credit score. What about judgments? Is it hard to get judgments removed if they've been on your credit report for, let's say, 7-8 years and they're still on there? Or if you got a collection that's seasoned?
The thing about judgments, They're not on most credit reports anymore. I don't know. Are they on mortgage reports? I haven't seen any on a.
They're not on mortgage reports, but the underwriter can still pull
That's
a
right.
report to see,
Public report.
on the back end of the underwrite if they've got a fraud safe. I think is what it's fraud guard.
Right. Yeah, I can't dispute it. I mean, I've removed bankruptcies and all kinds of different public reporting information, but anymore it's not included on the credit reports that we pull. It can be done. But we would have to get the information about the public report, the public information somewhere.
Yeah, it's they changed that a while back, but maybe 2 years ago I had a situation where it's not on the credit, but underwriting saw it on their report, right, and they still addressed it. So I don't know if that's still something that we could maybe tie into to get it removed. If it's seasoned over 7-8 years, do we still have to pay that liability?
It's going to be on a case-by-case basis, I would say.
Okay.
They're going to have to pay.
It's a very unique situation that usually doesn't come up anymore, but I was just in my mind thinking,
right.
What if I've got something wrong?
If it's on there, it's probably going to have to be paid if it can't be removed, I would think. Okay. I would think underwriting is going to require that.
Is there any advantage to doing a payment plan on any derogatory credit if they won't settle?
Are you talking about like with the original creditor?
Yeah. So if you got, some collection companies, if they won't settle, they'll put a customer on a payment plan.
Oh,
and that payment plan over a certain number of months.
Possibly, as long as they agree that it's going to be deleted. If they don't agree to that, if your sole purpose in trying to pay that is to raise your credit score, then if they don't agree to delete it, that's going to be a problem. Because what they're going to do, what they're required to do by law is to show how much was paid. So if they're saying, hey, it's $1,000, but you pay us $600 today, we're going to show a zero balance. Well, then that's what they have to show. They would have to show a zero balance. Okay, they're not required to remove that account. In fact, the bureaus kind of frown on that a little bit. But some of the collection companies will do pay for deletions, and that can be a quick, easy way to do some of these things. You have to do a pay for deletion correctly.
Yeah. Do you find it easier on the medical debts to get removed?
Actually, it's not as much about what type of debt. It's more about the company. There are some companies that will delete any of them. Some will delete none of them. So it's going to be on a case-by-case basis.
Are there any collection companies off the top of your head that collect on medical that will do that?
There's a lot of them. Yeah, there are a lot. I think it kind of started with Midland, and probably a few years ago, maybe 3 years ago or so. Midland just came out and announced, hey, if it's over 2 years old, when you pay it, we're going to remove it. And so other companies have followed suit, but not all. I know the bureaus frown on that, and that's potential. I don't know if they have retribution against collectors that do that. I don't know, but not all will do it.
Well, I know I read maybe last month or a few months ago on one of the mortgage news subscribes that I get is they're talking about not weighing medical collection debt as heavily on your credit score as it is now. So, I mean, that would help a lot of people. Yeah. My experiences with medical debt has never got to collections, but, again, in the industry that I'm in, when I go to the doctor or have some procedure done, you get the bills months later. And by that time, it's out of sight, out of mind, right? And there could be instances where you just forgot to pay, but you could pay. And next thing you know, it's in collections. But, for the most part, I think the collection debt when it comes to medical should have a little bit more leniency, so to speak, especially if they're minor balances, $100, $200.
Yeah,
I think
but
those in
itself, they don't put them on credit reports anymore. There's a law passed.
Okay,
anything less than 500 don't show up on credit reports. So,
and we happen to have that, send them to you to get them off. Is that how that works? If it happens to show that, because I've had, I think two last month that they were. Okay.
Yeah, because that's an infraction of the Fair Debt Collection Practices Act. And so, one of the things that we do, I'm not an attorney, but we do put cases together against collectors and creditors and even the credit bureaus. I put together somewhere over 500 different cases that helped our client get better credit and as well as other things, debt forgiveness in a lot of cases. So.
Now, one of the things that I saw in the news too is, this country has so much credit card debt running right now. It's in the trillions, right? And a lot of my customers that I've seen in the past have done many, not necessarily a home equity loan to do a debt consolidation, but a consolidation within a consolidation, I guess, so to speak. They consolidate all their debt into one, let's call it SoFi, for example, and they consolidate all their revolving debt into one giant revolving debt. Is there an advantage or a disadvantage of doing that?
Possibly an advantage is if they can get a better interest rate. These cards, even if you have great credit, a credit card, it's nothing to have 12.99, 15.99% interest rates with great credit. And then think about some of the folks, they're paying 30-something% interest rates and they're making minimum monthly payments. They're never going to pay it off. So that is one way to potentially help those folks that are having problems. I mean, this is a problem. Revolving credit right now is a big problem. I read an article a couple of days ago that people now are not expecting to ever pay off their credit card debt. And that's terrible news. That's horrible.
Does it change the effect of the credit scoring if they consolidate into one giant revolving debt or having multiple revolving debts with balances?
Well, it's going to be dependent on what was the state of those. First of all, like their overall balance to limit ratio or utilization ratio. So if their utilization ratio is higher with that new loan, that could affect their scores negatively. If it helps them, maybe they're already 100% utilization or more. I see a lot of them that are more than 100% right now. So, doing that loan, it's just going to depend on the circumstances and the type of loan, but it could go up or it could go down, just depending on those things.
So it's case by case. I would have to think there's probably a little bit of a positive aspect and effect of doing that. But you never know, I guess, until you pull credit and see.
And it could be a negative aspect initially, but it could help them turn it into a positive aspect more quickly, I would think. If they'll really work hard. And that's what we had to do. When we were going through credit repair, we worked hard to catch up on our payments, to do everything that we were asked to do. And we were very successful. And that's one of the things that got me in this business. So it just depends on your customer. How is it something they're serious about, or are they not?
Yeah, there's a lot of things that go into play. Some people don't care about your credit; they just give up on it.
Have good intentions, and then 60 days later, they're back to doing what they did before.
Yeah. Now, do you have any success? We talk a lot about the VA home loan and veterans and active duty members. Are there any suggestions or scenarios that you can give maybe someone who's on active duty in another country that has credit, building credit? Are there any advice you can maybe give them?
Well, I don't know.
That's kind of an on-the-spot question.
Yeah, that kind of depends on the situation. Maybe they may want to freeze their credit. If they're out of country, you may want to do that temporarily. They can what they call thaw it, but they got to keep that PIN number to do that. That might be the thing because they have less control. They're not probably seeing their credit as often being overseas. So I would probably say that might be a good avenue to take.
So if you know you're getting deployed, freeze your credit because you may not need to utilize anything while you're serving the military.
Yeah, unless you need that credit. Yeah, unless you need it, then,
Yeah.
Need it quickly. Because when you use a pen, it could take a little bit of time. Not too long, but yeah, I think that would probably be good advice.
Or hope you have the capability of being an authorized user on an account with your parents, possibly, if you need to use credit while you're gone. That could be an idea too.
Yes. Yeah, that would be a real good idea.
Are there any stories you have of helping military members after they get discharged coming back to civil life, and they've got some credit challenges just because that's just sometimes what happens when they come back to the U.S. after they've served?
We've helped folks that are military folks. I mean, probably at least hundreds of them in the 20 plus years I've been doing this. No story really just stands out. I mean, I do have things that stand out, but maybe not with military people. We've had a lot, but
right.
It's not. We want to help all of our clients, regardless of their background, ethnicity, or anything. We want to help each and every one. We've helped a ton of military people. I just, it's not that I treat them differently or anything. It's, every situation's different.
Yeah. But their circumstances sometimes are a little different than you and I, right? They're coming back from overseas, and they may not have any credit, or they may have that one credit that they just never got to pay on time, where they may need your service to maybe give them additional advice on what to do to get a credit score higher enough
to
maybe do a
point.
VA home loan.
Yeah. Okay. So one thing about being a veteran is that you get a lot of respect, and you get a lot of people that appreciate your service. And so what we can do is we can get on the phone and call up and just explain what happened. Everybody's got a story. Most everybody's got a story. And so if it's a legitimate story, that may sway them to at least look at it and possibly remove it, So I would say we have done that. Military people have really good stories. I mean, they're overseas a lot of times, and all of a sudden they're moved somewhere else, and
yeah. You may have someone who's been deployed 3 or 4 times, and they've gone to war 3 or 4 times and come back, and now they've got to take care of their credit. That's really not on top of mind when they come back.
That's right.
So a few takeaways that I know that are important is you got to pay your debts on time. That's key number 1, right? Pay the debt that you have on time. Try and build a strong credit profile and have something in place to monitor your credit on maybe a quarterly or semi-annually consistency.
Yes. Yeah.
Okay. Is there anything else you want to maybe add to benefit having that credit monitored?
Benefit as far as having credit? Well, I can't think of anything other than just the fact that you're able to see stuff in real time. Growing up, listen, we didn't know anything about credit. I think quite a bit older than you. We knew nothing about credit. We didn't even know what a credit score was. In fact, as a young man, I had a business, and I went down to see the president of the bank, actual president of the bank. I sat down, he had my credit report there, and I'm thinking, I bet he's impressed with this credit score because I've never been late. I've got to have perfect credit. He never said a word about my credit. So finally I asked him, I said, Paul, what's my credit score there? And he looked and he goes, it's a 687. And I'm thinking, the highest score's got to be a 700. And so I said, well, is that good? Is it fair? What is it? He goes, I guess it's pretty good. This is the president of the bank. And I'm saying, I'm thinking, you guess it's pretty good? I thought it was going to be great. And I was really disappointed. But he really didn't understand credit. That's even back then, that's just the way it was. So one of the things I really think people should do, even if you just use Credit Karma, at least monitor your credit and watch it, try to watch it. I try to watch mine every day, but try to watch it at least every week or so.
Okay. Especially if you open up something new.
Yeah.
Want to see how that credit score gets affected right away, right?
You'll be able to tell. One other thing I would add that I don't know we talked too much about, if you have credit cards, experts say that you need to have below 30% utilization. So if you've got $1,000 credit card, you would want to have it below $300. Now, if you want to max that benefit, get it down below 10%. And that does make a big difference. You get all your credit card down balances down below 10%. It can increase your score by a lot of points.
Okay, that's one thing that we do on our with the credit bureaus that we pull. We can do a credit analysis and play around with balances and what that does to credit scores. So you're right. Anything at 30 or below does help. It is kind of funny though, trying to figure out how each bureau determines that figure, that number.
A little different.
It's not consistent, right? It's always different. That just blows my mind how you can have the same defaulted theory, but you have a different result.
In fact, yes. On mortgage scores, they use a 5, a 4, and a 2. Most of your credit reports will FICO 5, a FICO 4, and a FICO 2, and they're going to be a little different. They factor things in a little differently on each of those scores.
Now, this is kind of an off-the-cuff question, but if something changes how credit is driven and determined, will that change anything on how you approach to improve credit scores? Or will that thought process kind of be the same?
No, it does. A big change was when a lot of these companies collection companies went to doing pay for deletions. So I recently had a lady in our program. She had sold her house, so she had money available. She was in a big hurry to get approval. And so what we did, we got on the phone. It was a couple of days that we were on the phone because she had several, and we settled almost every account on her credit report. And I recorded the calls and made sure that they were deleted. So her scores were able to go up very quickly, which is not something that could happen in the past. You would have to dispute, and that can take a while. It could take several months. So that changed things rapidly. That's one of those things that really did change quickly.
And maybe I missed this, but do you still have to, when you're talking about the accounts, do you still have to mail them something to show a paper trail that you're disputing the account, but you're trying to get it resolved? Or can all that now be done over the phone? And I mean, is there other ways to make it done quicker? Does it still have to go that way?
You can do online disputes. Those have never been all that great. Typically, we send out disputes by letter. Or, sometimes we have to get an attorney involved, and then we do a pre-legal dispute. Basically, what that means is if you had a client and legitimately they have something derogatory on their credit report that's affecting them, affecting their score, then I can prepare pre-legal disputes, send it to your client with instructions. They're going to send it in. And the reason we do it that way is the attorneys that I utilize are going to want them to actually have signed it and sent it in. And then we sit back and wait. They'll actually send them and get a receipt showing when they were received. And we'll sit back and wait about 30 to 40 days. And if it's been deleted, that's great. If it hasn't been, then I'm going to put a case together. I'm going to send it to an attorney, and he or she will take it over from there. And typically that ends up in the client's favor. Sometimes they get sometimes they get money from the credit bureau. Credit bureaus, most people don't know this. They spend a lot of money on settlements, a ton of money. It's no telling how many they get a day, actual lawsuits and so forth.
So the end result is going to take a little bit of time, but it's worth that time.
Yeah, I mean, it can take a little bit of time. If Usually the credit bureaus, if it goes to an attorney, sometimes they'll bypass the court and they'll go call directly to the credit bureaus and speak to the attorney there and say, hey, here's what we got and here's what we want. And if they won't do that, then the attorney will file a lawsuit. That's usually the way the attorneys I've worked with, that's usually the way they do it. So that's
this is good stuff. Yeah, this is good stuff to know because.
I'm sorry.
What's that again?
If it does go to court, it's a lengthy process. Several months, 5 months.
So when you say court, you're like court date, show up at court type
if they
thing?
actually sue, file a lawsuit, and it goes to, they fight it and it goes to court, that's going to be pretty lengthy.
Wow. Okay.
Yeah.
I'm going to guess that's going to be a strong case-by-case, big credit reporting project to fix, if that's the case.
Yeah.
Okay.
But most of the good ones are really against debt collectors. That's the really good lawsuits. They do a lot of violations. And you know what's really funny, Richard? When a client is talking to them, they don't know what a violation is,
Right.
But once you know and you hear it, if you've got it recorded, I mean, that's golden. A lot of these collection companies do violate on probably most every phone call they make. You just have to know.
Don't they have to record their phone calls too?
I don't know that they have to. They do for their own protection.
Yeah.
And sometime I will tell you a really good story about that. It's kind of lengthy, but I'd love to tell you a story of just about that. It turned out really good. In fact, that lady got a $55,000 settlement from the collection company.
Oh yeah, tell it. Let's hear it.
Right now?
Yeah.
Okay,
sum it up.
I'll do the short version. So I had this.
Okay.
Yeah, I'd already gotten her 2 settlements from debt collectors. She sends me an email one day. It says, "Hey Ron, listen to this." And it was in it. She had some recordings where she had asked the debt collector in each recording not to call her anymore, and she was very specific: "Do not call me on this number anymore." So after a while, after it kind of calmed down a little bit, this was an Indian call center. I put a case together and I sent it to the attorney. And what ended up happening is the attorney reached out to the collection company and then ended up having to file a lawsuit. So once the lawsuit was filed, the owner of the company called up and told the attorney, "Hey, this is BS. We're not going to pay you anything. This isn't true." And the attorney's going, what do you mean it's not true? Well, the people that she was talking to, they never told her, she never told them to quit calling. And the attorney said, "Well, how do you know that?" I said, "Well, we have recordings." And he said, "Well, okay, I tell you what, how about we send you our recordings, you send us yours." And so we swapped recordings. He listened to it, and sure enough, there was, on each phone call, there was anywhere from 19 to 31 seconds missing. But they didn't know that because it's an Indian call center that recorded it and sent the recordings to them. So how they found out, they didn't listen to our recordings. And so it kept going. And finally, our attorney did a deposition. This was a company in Texas. And in the deposition, when they came back from lunch, our attorney had played all the recordings for them. And their attorney, which was a high dollar attorney out of Houston, Texas, he started getting red in the face, and he jumped up and he said, you knew this, you did this on purpose. And he goes, "I didn't do anything on purpose. You guys wouldn't settle with me." What had happened was that attorney never listened to the recordings we sent, and it was all his fault. Yeah. I like the collection company. I've actually referred people to them. They're a very good collection company, but that was the attorney's fault.
Wow.
So
I'm going to guess that attorney doesn't work for them anymore.
You're right. Probably not. But it was $55,000 because that was a felony. You can't alter evidence. They had altered evidence. And so that's...
Oh, geez. So they went...
Yeah.
Incredible.
Yeah.
That's a good story.
Yeah.
That's a very unique story.
Just a lot of them don't result in settlements that high, but there are a lot of good stories. Real good.
So there is a benefit to reach out to you if we've got some problems and some challenges on the credit. So how can people reach out to you and your company, Ron? How can they get in touch with you?
Well, my direct number, my cell phone is 972-658-3562. They can go to our website. That's TCS, like Thomas Charles Sam, 720.com, TCS720.com.
And if they're locally there in Van Alstyne, they can just come by or give you a call, right?
Sure. They can do that.
Absolutely.
Also, my email is ron at tcs720.com.
Excellent. And again, my name is Richard Sarey with Alliance Mortgage Group. If you want to reach out to me, if you got any credit questions on a bureau that you have in front of you, my number is 214-872-2188. And you can always reach out to me on my email at rSarey@alliancemtggroup.net. Ron, I do appreciate you. Good information out there. I'll grab a link from you and we'll put that link on the podcast for people to reach out to you too.
Thank you so much for having me today, Richard.
Absolutely. Everyone, we'll talk to you soon. Thanks for listening.
Thank you. Bye-bye.
If this episode has been beneficial, we'd love to hear from you. Please leave us a review on your favorite podcast platform. Also, for regular updates and tips, make sure to follow our social media channels, which you can find in the show notes. Until our next episode, keep making homeownership dreams come true.